Good afternoon to you all. Welcome. You're on KTN Business today. My name is Peter Wakaba, and this is your 1 hour of news, views, and indeed breaking views from right across this country and right across the continent. Today we have a wide array of stories for you, of course, including the fact that the president has signed the interest rate capping bill into law. Now that deed is done. So what next? We will, of course, have various reactions to that, including the fact that Amani Coalition leader Musalia Mudavadi is standing by in Vihiga, where he was set to address the county government, the county assembly rather, and will be coming to us shortly just to give his view on what that means for this economy. And moving on, we are asking you to talk to us on the various forums where you can reach us. You can reach us on Twitter, reach out to us on @PeterWakaba and on @KTN News. And the Twitter question we are asking you today is, do you think the banks will be able to obey the new law, and will they help Kenyans access cheap credit? Of course, the fact that this is important to most people and getting various reactions and feedback is critical. So do reach out to us and let us have your thoughts. We will sample those as the show does go on. We now move on, just to give you a bit of background. Now that that deed is done, just what was the genesis of this interest rates capping law? After lamentations from Kenyans shocked and left destitute by interests on loans several times more than what they borrowed in the 90s, the then GEM MP Joe Donde triggered a war with banks with his Central Bank of Kenya Amendment Bill of the year 2000. The banks challenged the law on a technicality in court and won. But both Joe Donde and the spirit to keep fighting to control interest rates have remained in the minds and hearts of millions of Kenyans. Since then, KTN's associate editor Noah Tino has been following that story and now takes us through that journey.
The last half of the year 2000 would bring the name of Joe Donde to the international limelight. Many wondered how he could take on the financial might and economic importance of banks by challenging the free reign of banks when it came to charging interest on loans. Donde's bill wanted almost exactly what the Jude Njomo bill has achieved, a maximum of 4% interest on loans on top of the Treasury bill rate and a cap on interest on deposit not lower than 4% of the 91-day Treasury bill. The Central Bank of Kenya Governor Mika Cheserem then, the Finance Minister Chris Okemo, and the then World Bank County Director Harold Workman were furious.
Took 15 million shillings each to make sure that this thing is not in the order paper. Why call a meeting here? What for? Waste of time. Well, I don't know. People can't go and take bribes, 15 million each. They are senior cabinet ministers, and they expect me to sit with them on a round table?
Lobbying began in earnest. Some MPs then, just as now, fought the bill in Parliament. A whirlwind of meetings followed. Accusations flew back and forth on who was or wasn't working in the interest of the ordinary Kenyans.
And yet these multinationals now, instead of having in mind the plight of a majority of the Kenyans, they focus their lobbying only at the top. They think they can have their way by canvassing the Vice President, the Minister of Finance, and the President.
We should say who gave the money for Honorable Okema and myself, which it was. In any case, can we say this? I think the most stupid habit Kenya now have is to make wide allegations of bribery. I expect leaders to be above that.
It was a meeting arranged by the Speaker. We were prepared to attend if we were coming to this with clean hands. But since people are coming with dirty hands, I don't think it will serve this country. These guys are selling the country to the banks.
But MPs passed the bill on 5th December 2000. President Daniel Moi would later assent to the bill to make it law. But the bankers saw a loophole and jumped into it to save their billions. In the bill that Moi signed into law, the commencement date was given as January 1st, 2001, while the bill itself was dated January 6th, 2001. The Court of Appeal ruled the law could not apply backwards and told the banks to ignore the Donde Act. The war was lost. But another game MP, Jakoyo Midiwo, would attempt to revive the fight in the year 2012, but the Treasury convinced MPs then that it would go against the concept of a free market and regional financial integration. Treasury indicated that the high interest rates could be addressed by a proposed law to overhaul governance at the Central Bank of Kenya. It never happened.
The solutions relies on the root cause of why interest rates are high, not second best solutions like controlling and all that. So
Now, 16 years ago, in December of the year 2000, it was billed as a 20 billion shilling war between the then game member of parliament, Joe Donde, and the Central Bank of Kenya, the commercial banks, and even the World Bank. Now, many people never expected President Uhuru Kenyatta to sign this bill into law. In fact, some people thought that the politics of controlling bank interest rates would outweigh the public interest. But now, by signing this bill, some believe that President Uhuru Kenyatta may just have locked down one of his biggest bargaining chips for his re-election next year in the general election. Noah Otieno, KTN News, Nairobi.
So, well, indeed, the deed is done, but does that mean that the war is won? Will the banks once again head to the courts, well, to try and knock out this law that has been passed yet again? That remains to be seen. That, of course, is one of the stories that we are following up for you to be able to bring you different perspectives on just what this means for you and for this economy. Now, for the proponents of the interest rates capping law like Joe Donde, this moment has been long in coming. We caught up with him and other stakeholders who hold totally different views to gauge what their reaction is.
This bill is overwhelmingly popular, and I think members of parliament, and the National Assembly rather, responded to that pressure. But whether it is necessarily going to reduce interest rates and make that one access, I think is a matter to be seen. It just depends on how the banks and financial institutions that are addressed by this bill take it. If, for instance, they see this as an unfair kick by Parliament, and obviously they made a case which completely collapsed, then they may decide that one of the ways to do that is to roll back credit provision to smaller borrowers, which is a very, very real and present danger. So if that happens, yes, we'll have low interest rates, but there'll be many more, fewer people with access to that. And there might actually be specific segregation of clients and trying to find everybody. So the few people who will be able to enjoy low credit, interest rates will be there, but a majority of Kenyans will not necessarily be affected in terms of access to credit. And that's the real danger.
16 years ago when the Donde bill came in place, it took us 6-7 months arguing with the banks in the best way forward. I wasn't going to bring this bill if the banks could be honest and take their honest money from Kenyans. But they were dishonest. They actually told me that if I give them time, they will comply, they'll bring the rates down. They actually accepted the rates were too high, and so on and so on. 16 years down the line, have they done it?
Yeah, so 16 years down the line, have they done it? Indeed, a question that remains to be answered. Indeed, people asking whether the banks will toe the line and follow through with what the law recommends. The reactions continuing to come quick and thick. Now, of course, the gentleman in the first part of that clip was the CEO of the, that was Kwame Owino, who is the CEO of that escapes me for now, but we do continue, and the Kenya Bankers Associations are not the only ones seeking to weigh in on this matter. National leaders too are lauding the move by the president to sign the bill, and Amani Coalition leader Musalia Mudavadi is in Kakamega to speak to, is in Vihiga rather, to speak to the county assembly, but has taken time off to talk to us and give us his reaction. Now, sir, I mean, the most important thing here today, the largest question on most people's minds is just what is your take on this law and what does it mean to Kenyans? Mr. Mudavadi, if you can hear me, we have come to you now and we are asking just yes, what is your take to this law, on this law, and just what do you think it means to Kenyans?
I think that
we do seem to be having some technical difficulties right there, but we will of course correct that and come back to Mr. Mudavadi. He of course wants to be able to give us his reactions on what exactly that means for Kenyans. Now, we have the TICAD conference here in Nairobi this week, and hosting this has quite a lot of meaning for people here in this country. The conference here in Nairobi with thousands of delegates, including up to 35 heads of states expected to attend. So just what does this mean for commerce in Kenya? That is a question my colleague Abi Agina has put to the officials of the Kenya National Chamber of Commerce and Industry. Abi, please take it away.
Well, many thanks for joining us. We are speaking to the Kenya Bankers Association Chief Executive Officer Habil Olaka just a day after President Uhuru Kenyatta assented to the bill that seeks to cap interest rates. Of course, a lot of reactions coming through from the banking players. And let's now get a quick update from the man himself, Habil Olaka. Thank you for making time on KTN News. First things first, what's your reaction to this bill that has been assented to by the president?
I think it's
Apologies for that mix-up. We, of course, will try to get things in order now. Sake is widely known as Japan's national alcoholic drink. It is believed that Japan has been making sake in one form or another for over 2,000 years. Now, technically, sake just means alcohol, so any kind of beer, wine, or liquor would be considered sake. But what most people as Japanese rice wine call is nihonshu. And although it's referred to as rice wine, it probably would be more accurate to say rice beer, because wine is made from fermenting fruit, while beer is made from fermenting grains. But rather than tell you about it, let's just see for yourself.
This is Letters from Japan. Today I'm having sake. Sake is widely known as Japan's national drink. It is believed that Japan has been making sake in one form or another for over 2,000 years. Now, technically, sake just means alcohol, so any kind of beer, wine, or liquor would be considered sake. What most people mean as Japanese rice wine is actually called nihonshu. And although it's referred to as rice wine, it'd probably be more accurate to say rice beer, because wine is made from fermenting fruit, while beer is made from fermenting grains. Nihonshu can be divided into two primary types: pure rice, referred to as junmai, or non-pure rice. To say that nihonshu is pure rice just means that it has been brewed using only rice, water, yeast, and koji. Beyond this, there are several other factors that distinguish different varieties, such as the type of rice used or the brewing process. Another factor is the amount of polishing that the rice has undergone. In most varieties, only about 10 or 30% of the rice is polished away. However, with Daiginjo sake, more than 50% has been polished down, making it one of the most premium varieties to be found.
Now, most sake is clear, but there is also a white and cloudy variety called nigori, which appropriately means cloudy. The cloudiness is unfiltered residue from the rice. This results in a very sweet, mild flavor, much like a dessert wine.
Now, most of the time, nihonshu is best served cold, but sometimes it's served warm, especially during winter. Heating masks its flavor, so as a general rule of thumb, high-grade nihonshu should not be warmed. When you warm sake, you need to warm it indirectly through a separate container, like when melting chocolate. Just make sure that you don't warm it too quickly and don't allow it to get too hot. For more information about sake, check down in the description. Also, if you enjoyed this video, please subscribe.
Yeah, so as we had indicated earlier, Amani Coalition leader Musalia Mudavadi is one of the people who have been reacting to just what has transpired with the president signing this, a bill into law. And of course, the fact that this has a lot of meaning for many Kenyans. And we just want to get his take on what this portends for Kenya going forward. Now, Mr. Mudavadi, if you can hear me, please, karibu sana to business today.
Yes,
what
I can
is
hear
your
you
take on this law, and was the president right to sign it into law?
Well, I think the president was caught between a rock and a hard place, because the reality is that the public has been feeling that interest rates are too high, and banks have taken too long to institute any self-regulatory measures. So under the circumstances, the president took the political decision to sign. But I think going forward, the government itself must make sure that it also controls its appetite for borrowing from the public, because the central bank rates are usually based on the level of borrowing that the government is going to undertake from the public. So if the government's appetite becomes very big, then the interest rates will definitely rise again. So that is one factor that the government must take into account. We are not yet out of the woods.
Do you think...
The second thing is that
No, sorry, just keep going, please.
Yes, let me just quickly finish. The second thing is that there are a lot of issues of interpretation that have got to come through. For instance, they must make sure that they clarify a few things. Is it going to be retroactive, or is it a rate that is going to now touch on forward contracts? That is any new signing that comes up, because the banks had already entered into legal arrangements with some of their customers under the old regime. So you must also be very clear that are you going to start this new process at new rates, new undertakings only, or what happens to the old contracts that are running with various bank customers? So these are fundamental issues that will have to be sorted out before we can say that the Kenyan public will realize the full benefits of lower interest rates.
Now, from what you're saying, then this portends a legal minefield going forward. And it has been said that this maybe have been a populist move because of the elections. But for the economy itself, some of the things you say, if we do slow down on government borrowing, especially for development, then this might have a negative impact on the economy. How do we balance the two, keeping borrowing in check while still driving the economy forward?
You see, that's the question. The economy must grow for this to make sense. But on the other hand, if the government is going to continue on major capital projects, and when they presented their budget, you could see the projections in terms of what is going to be public borrowing, say to cover their debt service, to deal with aspects of the SGR and other programs that they have. So when I look at the balance sheet of the government, they are likely to be in the public market borrowing money for a fairly long period of time. Now, that is going to have an impact on interest rates. And this should be known to the public, that at the end of the day, it is the appetite of the government that will impact on interest rates. The other thing that you have rightly said is that, yes, we could face some, banks could be entangled in a number of litigations with their customers, because some of them will be wanting to benefit from the low interest rates immediately. But there are also existing contracts, which are legal contracts. And those are issues that the market and the government and indeed the financial sector will also have to look into. But as a caution, I think going forward, we also have to be clear that we are not rolling back as a nation from a liberalized economy, because this might be the beginning of a systematic process where, without realizing, the government can be forced to fall into the trap of reintroducing a lot of price controls in different areas. So going forward, these are very important issues, and the government must come clear. Is partly their own doing, that they did not really take this matter seriously when they knew Kenyans were agitating for a more friendly banking environment.
Maybe finally for me, and I think most important, even after talking about a retrospective application, the fact that this law has come about because there has been the feeling that at the grassroots, Kenyans are not benefiting from credit. Do you think this move to, well, create this law will enable Kenyans at the grassroots, Wanjiku, be able to access credit at an affordable rate and conveniently?
You know what has really happened is that we have tackled just the aspect of the interest rates, But all other requirements, the legal requirements for collateral that banks have always been putting there have not been affected. So there is a good feeling in the air, but in reality, the regulations in terms of the securities that you must put on the table have not changed. So this will remain a challenge.
Do you think we'll see the banks go again to court to try and challenge this? What do you project going forward?
Well, I suppose the banks, I'm not their lawyer. I think they'll be looking out clearly for anything that might mean that the law is enacted retrospectively, because if that happens, then they'll jump onto it to go to court.
Well, Musalia Mudavadi, thank you very much for taking the time to us, coming to us there from Vihiga, where, of course, you are set to address the Vihiga County Assembly shortly. Thank you indeed, sir. We now want to proceed to a short break, but when we do come back, we want to talk about businesses and sustainability. And just